Hi, welcome to AZ Trades with Manny. We'll be going over any positions that I personally take from initially scouting the position, opening the position, any sort of management in between, and hopefully closing the position for a profit. Today, we'll be going over a short put spread. Okay, so I'm currently on the higher end of my buying power usage, my preferred buying power usage around the 60% mark. I still that's a place on the trade. Um, and because I'm on the higher end, I would like to define my risk. So I would want to use probably no more than $1,000. This is my step-by-step process, finding a stock and placing a short put spread. So I already created a watch list ahead of time. This is my B&B watch list. So I have a bunch of stocks here. But in your case, if you don't already have a watch list, you could probably just go into Casey Trade and go to the default. Okay, so yeah, so actually for the sake of this example, so you could follow along with me, I'm going to stick to the Tasty default. Okay, one of the most important aspects we use, like one of the most important filters that we use is IV rank, right? As of right now, the volatility in the market is pretty high, but I typically like to stay around the 30 to 100 range, but this gives me a lot of options. Because there are trades, no, because there are, like, I have a good selection of stocks that are above 50, so I'm going to stick with that, 50. Okay, so I would like to stick to something that's on the higher end. Sorry, I've traded on GLD, I've traded on GDX. Let's try Meta. Yeah, because why not? Right? My goal here with this short put spread is to just take it at either 21 days expiration or 50% profit. So there's two metrics I like to use. I either like to use this expected move, so which is this brown bar right here, or I like to go by maybe like a 20 delta. Yeah, I think just to be on the safer side, I'm gonna stick to this expected move. So I'm gonna be just outside of it, right? So if I sell the short put spread, right, as you can see, the buying power efficiency is about $5,000, and since this is undefined risk, if it goes lower, the margin requirements change and can go up, right? So I want to make sure I cap my risk at this, right? So in the beginning, I said that I wanted to strictly use $1,000, and because of that, I want my wing width to be about $10. $10 in the difference in the wing width, right? Times 100, that's $1,000 max risk, right? So I'm gonna sell the 485 put, and I'm gonna buy the 475 call. I'm using up about $828 in buying power for this, right? And the reason why it's $828 and not 1,000 is because I'm collecting a credit for it, which is $108. If you watched my Strangle video from last time, as you know, I like to go with the monthly cycles because the weekly expirations aren't as liquid. So I like to take profit either 21 days expiration or 50% profit. So it wouldn't really be reasonable for me to take a trade here at 21 days expiration, right? So I'm gonna stick to the 56 days to expiration. Okay, so yeah, 180% max profit minus 820 max loss, and you would think that this profit loss margin is not very good, but in return we get a higher percentage of hitting 50% of profitability. 85, 86, I feel pretty good about this. Just for defining our risk, the theta is going to be a little on the lower end, but as time goes on, like theta is going to ramp up. It increases at a non-linear rate. I have a profit of 180 and my max risk is 1,000. You might think that $180 is not that much, right? But that's an 18% return on investment. I would actually say that's pretty good. Okay, so I'm going to place this trade. All right, no fill. So I'm gonna lower it by 1. Yeah, I know the mid price is 175. I want to see like what the best price I can get is. No fill there. No fill there. 7. 76. Okay. Now we're down to the mid price. Not selling here either. 64. Okay. So we got filled at 174 with $1,000 of risk. Okay. So since this is a short put spread, this strategy is neutral to bullish, right? So it could stay exactly the same, or it can go up, or it can go down, but not past 185 strike. 180, this 485. If it ever gets down to 485, that's where I start to get in trouble, right? But for now, I'm not really expecting it to, right? Once again, we had about an 85% chance of profit. So, yeah, today's June 26th. I'm gonna give it some time to do its thing, right? If it goes up unexpectedly, right, then I'll re-record and take profit on camera. But yeah, in the meantime, I have this set up. I'm just gonna wait out. Oh wait, actually, I actually forgot to go into the analysis mode. Okay, so alright, yeah. So this is currently the profit loss, right? We're currently trading at 556, and yeah, as you can see here at expiration, right? This is what happens at expiration, right? Our max profit is 174 because we sold it at $1.74, and that's 100 shares, so $174 in total profit, right? And our risk here is 826. Like, this is the max loss we can have because we have that protection from the long put. Yeah, so it, like I said, it can literally stay like above, like at any point above 485 is where we're good, right? If it goes up to like 1,000 or whatever, right, for whatever reason, then I gotta take profit a little bit early, right? But in the meantime, just gonna wait it out. Yeah, as you can see here, we have about an 80% chance of profiting. So yeah, I feel really good about this. I feel really good about this trade. So I'll see you in maybe like 2 or 3 weeks. Okay. Wow. Yeah, it's only been about 5 days. I opened up the trade here on June 26th at noon, basically. Yeah, it's only been 5 days. My profit target has been hit. Right, I was originally expecting to collect 174 divided by 2. That's 87 cents. But I woke up to Meta going up by 10%. So yeah, that's really good for my short put spread, right? Yeah, so let me just close out of this. Collecting a profit of 108. I didn't have to make any adjustments. I just opened it up like 5 days ago and just waited. So yeah, here. Okay. Yeah. So I walk away with about $109 in profit. Yeah. See, this is pretty straightforward. $109 in 5 days. Like, all I did was open up the trade and close it. That's it. I didn't have to make any adjustments or anything, right? Like, in the future, right? If I ever were to, need to adjust this, like, it would probably be because like Meta goes crashing down, right? But again, right, I had an 85 to 87% chance of winning this trade, so I already felt good going into it. But in the case that I did, right, in the case of the 13 to 15% of this trade going, guess what would happen, right? I mean, look, I already defined my risk here. 485 to 475, so I wouldn't have minded taking that loss, right? But in the case that I did theoretically want to extend it, I would probably just roll it out to the next expiration, collect some more credits, right, and give the trade more time to work, right? I could even adjust the strikes if I really wanted to, but yeah. Hopefully in any future videos I can go over a scenario like that. Yeah, that was a great trade from start to finish. From the very beginning, we defined our risk at $1,000. We took note of our probability of profit, and we really struck out by only having to stay in the trade for 5 days as opposed to the 2 or 3 weeks I was originally expecting, thanks to that 10% move on Meta. In the future, we'll be exploring trades with a similar setup just like this one. I'd really appreciate it if you liked, subscribed, and commented on the video. Looking forward to exploring more trades with you in the future.